Good evening, everyone. Thank you for joining in. I can see most of the registered people are already attend. So I'm gonna wait for 3 more minutes just to let everybody come in, join, and we'll get started. If you have any issue, please flag me or write in the chat or questions so I'll know we have any issues. If we have some, if you can see my screen and hear me fine and well, then we'll get started in a couple of minutes. Thank you. Okay, so we'll get started. Good evening, everyone, and welcome to the CMSTrader webinars program. A short introduction before we get started. CMSTrader is a very unique financial firm. We have several offices located in Europe and Asia. Our junior financial experts are being recruited only after 5 years of proven successful experience from large investment firms. A bit about myself. My name is Elliot Grant. I have about 17 years of experience in trading. I'm one of the senior financial experts here. I have a BSc in mathematics and statistics and a BBA in accounting. And I very much love what I do. So a bit about what we're going to do and learn today. We're going to understand how to analyze an asset and what's the first steps in analyzing an asset. We'll start with about 10 minutes of basic calculations. We'll explain terms like leverage and PIP for newbies in the audience. We will then analyze a long-term trend from all aspects, long-term direction, fundamentals that affect this trend, and significant prices on that asset chart. And then we'll combine it all to understand how to find the best entry point and exit point, and most importantly, how to choose the right size for that position. Before we'll finish, I'll show you a specific opportunity that is relevant for today, for the next 48 hours, actually. And that's it. So again, we'll start in just 1 more minute. I see a couple of people have a few issues with hearing me. So I'm going to wait for 2 more minutes just to solve their issues, and we'll get started. Thank you. Okay, problems are solved. So let's get started. Guys, what you're looking at right now is our platform, the CMSTrader Cyrix Station. This is the download version of our platform. There is another version which is a web trader that you don't need to download on your computer. If you're working, if you're trading from work, I recommend using the web trader. Not every place of work allows downloading such platforms. But at home, download the Civic platform, the Civic Station, sorry, has many more indicators and tools than the web trader. So let's get started from left to right. A little bit of what you see right now. You have the assets that we're available for trading on our platform, more than 250 assets. Obviously, it's impossible to track so many assets, so just mark and star your favorites. The drop-down menu, choose your favorites. It will be much easier for you to track the ones that you actually care about. On the right side, we have our social trading feature. For the ones of you that don't have a lot of time for trading, or don't know how to trade, you can just track someone else, a different trader, understand his progress, his profits, the number of traders. You can see how many people are copying him. It's a very, very useful tool if you really don't have the time or the knowledge how to do it by yourself. So let's start and give you a little bit of knowledge how to do that by yourself. You're currently looking at the asset Euro US dollar. The asset Euro US dollar means that we're comparing the price of a single euro, and we're trying to understand how much would I pay for that in US dollars. So you can see the price here on the right side. It says 1.1778. I care only about the first 5 digits, and the 5th digit is what we refer as pip, which is the smallest movement that we care about. So the price of a single euro will be $1.17 and 78 fractions of a cent. This is the way I look at the number itself. The chart, for the ones of you that don't know how to read a candlestick chart, I'm not gonna drill down into it right now because that's not what the webinar is about. But really shortly, these are, we refer to those as candlesticks. This is a Japanese candlestick chart. Every candle here represents a time frame. The time frame you can see right here on the top next to the asset. There's a drop-down menu that I can choose the time frame from 1 minute to 1 month. So this is a 1 month chart, meaning that every candlestick represents a month. If it's red, that means that the price went down at that month. If it's green, that means that the price went up at that month. Very simple to understand, and that's most of what you need to understand. This is the overall trend for that asset. What you're seeing here, I think is the most beautiful chart in trading. This is why I chose that for this specific webinar of understanding a long-term trend. What you see here, if I'm standing with my cursor on the left side, you know what, let me pull that window out. We don't need the rest of the platform anymore and just the chart. So if I'm standing with my cursor on the left corner, around the left corner, you will see at the bottom that the year is 2008. So what you're seeing in front of you right now is 10 years of a very specific and single trend. Obviously a downwards trend between the euro and the US dollar. Now, technically, it's easy to see that this goes down, started at 2008 at $1.57 per euro, currently $1.17 per euro. We're talking about a drop of about 25% overall in the last 10 years. There were areas where this price was even lower than that. So really, we can definitely see a declining of the value of euro. Okay, obviously when it goes down, that means that the US dollar is gaining strength versus the euro. So this trend goes down overall for 10 years, but what's important is not only to understand the technical movement, which is down, up, we'll go over in a couple of seconds. I want you to also understand the fundamentals, or what really brought us to the point that this is declining so many times, the value of the euro, and why it happened every time it did. So we'll start from the beginning, from left to right. I want to do it briefly, really in a short way, because this is really ancient history, but it's nice to know, especially if you want to understand an asset. and understand the movements and the effects that an asset has from different events in the world, political or financial events. So 2008, huge crash of the euro US dollar. This is something that I'm pretty sure that at least most of you, if not all of you, know and remember 2008, the subprime crisis, housing crisis, mortgage crisis, or any other name. But eventually the effect is pretty much obvious. You can see that 2008 July started to drop. About 4 months, you can see 4 very big red candles. Price drops from 157 to 127. That's 30 cents of a drop in 4 months. Talking about 20%. That's huge. So obviously it was the crisis in 2008. We understand a huge movement like that. But even if we look at the rest of it, 2009, European debt crisis, the beginning of Greece crisis. Some of you might remember Greece was one of the fastest growing economies in the Eurozone. And when it announced on the huge debt that they have, starting to nationalize companies, that was the point, at least the beginning of this huge crisis, huge crash that you see here in the euro. 2011, Spain joined the crisis with a huge structural deficit. So when you have two countries like Greece and Spain from the European Union with huge debts, by the way, Italy was not in a very good shape at that time as well. Not that it's today in a very good shape. This was very or pretty obvious that we'll see a drop coming like this at that time. May 2014 election for the European Parliament is what was the trigger for that huge drop that you can see over here. But it's not just that. U.S. Treasury bonds and oil prices crashed in a dramatic way. I want to minimize that for a second. I want to find the oil chart monthly. I want to show you. One second. I want you to see that if I open a monthly chart on the oil, and I'll put my cursor over here, you'll see 2014, a very huge drop in prices. And that's comes together with this huge drop here at 2014. At the same time, there is a very simple reason for this correlation between the drop of the oil and the rise of the US dollar. The amount of money in the market doesn't change a lot. Yes, governments are printing money or selling bonds or buying bonds in order to control the monetary policy of the state or the region. But the amount of money is changing in a very small or in increments that doesn't really affect a lot for the long run. But so if you have an amount of money that is pretty much constant, the money only moves from one investment to another. So when you see prices of oil crashing, it's basically saying that someone is stopping to buy the oil, or a lot of people, not someone, but a lot of people or a lot of institutions are buying less oil, and instead of that, they're buying something else. So usually that would be other commodities like gold, or it's going to be currencies like the euro US dollar. So you know a lot of money moved from oil to holding US dollars, and that's what caused this decline of the euro or the strengthening of that US dollar. So now we're getting to those areas. I'm sorry if I bored you with all this history, but it's important for you to understand an asset from top to bottom before you trade on it, especially if we're taking a long-term trade. Let's understand a little bit of what happened here. We can see every time before that went down, jumped up, went down, jumped up. It wasn't stabilized at a certain price, not for as long as this area. It's about 2 years. You can see from left to right, started at 2015 at the bottom. On the right side, 2017 when it started to rise. That's 2 years of fluctuations with not a lot of movement. So a little bit about what happened here, 2015, the beginning of 2015. The situation in Greece and Spain got to a point where the unemployment rate is already 27.9%. 27.9%. That's an area that doesn't let the economy grow. So what you see here, instead of the price of Euro USD jumping back up, you actually see a stabilization. The euro cannot gain strength. I can tell you that me and almost every analyst around the world in this area made a mistake telling almost every client to buy the USD, to buy the Euro USD, sorry, to buy this asset, but the price was actually stabilizing. And even worse, it actually went down at August 15. I don't know who of you remember what this date means, but at August 15, the migrant crisis started. A lot of immigrants, refugees started flowing from Syria towards Europe. Germany itself took in 43% of all immigrants, of all refugees. And Germany, even though it's the strongest economy in the Eurozone, and by far the most stable one, even Germany couldn't hold so many refugees. The effect was immediate, and for 3 months we can see the prices dropping, relatively a big drop. We'll work on numbers in a couple of minutes so you'll understand how big of a drop that is. Prices after that went back to normal pretty much for 1, 2, 3, 4, 5 months that we saw that the US dollar is gaining strength, going up towards the direction to continue that trend, just like you see on the right here, but it stopped at April 2016. I'm sure this is something that at least 90% of you remember. April 16, UK announced that they're going for a referendum to decide whether they stay or leave the European Union. The vote itself took place in June, but already announcing that they're thinking about leaving the Union, that's the effect, and the euro weakened for 8 months, dropping back to a low point. Ever since then, we see a big rise. Things are back to normal, maybe aside the fact that Donald Trump became president at that time, so that's maybe the only less normal thing that we see at that rise. But we can definitely say it's almost back to normal. Now let me show you, I'm going to add a few lines to that chart just to show you how normal, how beautiful, and how easy it is to understand what's really going on at this chart. Now, on purpose, I didn't add those lines before because I wanted you to listen and not just see this beautiful picture that you have in front of you. What you see here is one trend, one tunnel of 10 years already. Every time it touches the lower line, it jumps. Every time it touches the upper line, it drops. So it's very easy to control a long-term trade if you understand the tunnel, if you understand the long-term tunnel, like you can understand it over here in the Euro US dollar. Obviously, not every asset is as beautiful as what you see over here. The Euro US dollar is the most tradable asset in the world. In terms of volume, if you'll combine almost every other asset together, you'll get the trading volume that you have on the Euro US dollar. So when you have so many traders, so much volume, so much money involved, that creates a beautiful pattern that is much easier to read because you have more elements involved. So what you see over here, 5 months ago, we reached the top, it touched the upper line and continued the trend as everybody expected. We gave all our clients the recommendation to sell over here. It dropped down. It's been dropping for the 5th month already consecutively. And understanding what you see right now, understanding this movement, I'm pretty sure that all of you can see that this is going towards the lower side of that tunnel to continue the same trend, the same path, the same movement. So this is the first part. This is understanding the trend, understanding the fundamentals that created this trend. Now, what's beautiful about trading, and that's maybe the biggest reason I do what I do and I love what I do, is because every time you look at the technicals, you'll see that it combines and aligns perfectly with the trend, with the fundamentals. So it looks like a magical coincidence. It hit the line, and specifically at that point in time, a crisis happened that created that movement. And that happened exactly when the price hit the line. Once, twice, three times, four times, five, six, seven times. 4 months ago, started the trade war. China and Donald Trump and Russia, now Donald Trump and Europe starting a trade war, and the effect immediate. And it's happening for some reason exactly on the line, exactly on the trend line. So that's I don't know what came first, the chicken or the egg, but it doesn't matter. It doesn't matter if the fundamentals affect it or it's the sentiment and mass psychology that affect it and creates it. Point is that it makes sense, it's logical, and it's easy to read. So we understand the movement, we understand where this is going. Now what we need to check is how low? How low is this going to go? Or if it goes against me, how high is this going to go? So I'll understand my risk as well. So what I'm going to do, I'm going to try and look for significant prices on that chart. And those prices will tell me where there is a chance that the price is going to change direction. So what I do, I'm going to put the line and then I'm going to click on that and drag until I see that at least 2 points are sitting on the same line. So I've stopped here because I can see that at that point in time, 2014, the price changed direction exactly after hitting that line. If I'm looking backwards, I can see 2010, price went up, hit the line, dropped back down. 2008, 2009, December and January 2009, I can see again a very big green candle hitting the line, touching it and dropping back down. So I know this line is very significant for traders. This price is very significant. Many times when they see that it reached that price, they change their sentiment from one position to another, from either from selling to buying or from buying to selling. This line in those areas is what we consider a resistant line. Now I'll continue. This is not the only one. We'll start going down till I'll find another one and I'll stop over here. Definitely a change in direction over here, hitting this price and changing direction. And I can see over here at 2009, the price dropped to that line, jumped up, dropped again to that line, and jumped again up. So definitely a very strong support line. This is what we call a support line. Not only here, you can see even a red candle over here that sits exactly on the line. So the line was crossed from bottom to top, but then retested the level. This is what we refer as a retesting of the level, and only then jumping back up. Let's continue. Let's find more significant prices here on that chart. So I'll drag another line. I can say definitely that this one is another one. Not exactly here. Let's be more precise with it. That would be here. I can see over here, price punctured it. This is what we call the false breach, that the wick, the shadow goes under, but eventually the candle closes above. So this is one touch. This is a second time. And here from bottom to top, it touches it and drops. So definitely sentiment change at that price. Here on those 2 times, it acted as a support. At this time, it acted as a resistance for the price. Let's see if we can find any more. We'll take another one and start moving until I find 2 points. I can see one here and I missed another one. I would definitely put one here as well. I can see it acted as a resistance for all the area here. Those 2 years, price touched it and dropped, touched it and dropped, touched it and dropped many times. If I'll raise it a little bit, I can actually see also that the price was retested here before jumping back up. And currently we're actually we touched it and we are sitting on the support waiting to see what's going to happen next. And the lower one over here, that would be our lowest support for that chart, for that asset, 1.0500. 3 times it would touched and jumped back up, touched, jumped back up. The beautiful thing is you can see it's a single price, but those 3 crises were different in essence. They were triggered by different things. There was different momentum and different strength for that drop, but still they all dropped to the one single price of 1.05. A lot of or let's say people who know what they're talking about or think they know what they're talking about are saying that 1.05 is the lowest point for that asset, the euro-US dollar, and that the governments, both of the Eurozone and the US, are making sure to keep prices above 1.05. People who believe in crises or love to see schemes or conspiracy theories believe that if it drops under and the price of dollar will be equal to a price of euro, then you actually see a dissolve of the European Union. I don't know. I don't really care. The most important thing and what you need to understand is how to maximize your profit from that movement, and to make sure that you did it right and you understood the risk involved. So let's try and understand what's going to happen now. If we're looking at a weekly chart, we can definitely see that this, on a monthly chart, sorry, you can definitely see that this needs to go down, continue the trend, and the next line that it needs to reach is the 1.05. The question is whether it will go up before dropping down. We don't know if it's going to happen, but we need to calculate this and understand the risk involved. So our current price is 1.1775. The closest line to us is the 1.2101. It's above us, and that's the risk we're taking if we will take a sell position, a short position. Right now, if it might go up over here, this distance is our risk. Let's calculate it. It might reach 1.2101 before dropping. The difference in points, in pips, between those two numbers is 326 pips. If any of you don't know how to calculate the difference in pips between two prices, just erase the decimal and subtract 12,101 minus 11,775. So that would be 225 to reach the 12,101 extra, the 326 pips. In terms of percentages, just like I explained before, every pip is 2%. So we're actually looking at 652%. So let's take a numeric example. Let's say I have small account, relatively small account of 10,000 US dollars. If I open a position of $1,000, the negative P&L that I'll have on that size of a position will be 652% of 1,000. That's 6,520 in minus negative P&L. So if I have a $10,000 account, I can sustain that fluctuation, but that's a very, very, very risky fluctuation. So if I have a $10,000 account, in this case, I will not open a $1,000 position. I will open maybe a $500 position, put myself or my account at risk of about 30% and not 65%, 32% and not 65%. And this is the smartest move to make to understand the risk first before opening a position. Now let's understand the potential. On one hand, if I open a $500 position, I'm taking a risk that it will go against me, might go against me in $3,260. So I will be in a negative balance, but I don't have a lot more to afraid from, to fear from, because if it touches that line, it has not a lot of room to maneuver. This is the trend line already. So it should, even if it goes against me, it should touch that line and then drop back down. So from my current rate, I will start making money. So let's calculate what's my profit potential for that position. Our current rate, 1.1776. Our target price, 1.0500. Different in pips, 1276. I hope, guys, that you understand this calculation already. That's 11,776 minus 10,500. So 1276 pips in percentages, that's 2,552%. So if I open my $500 position, which with leverage will be 100,000, it's exactly like what we see over here, I will make on that position, the potential of profit that I have for that position will be $10 per pip times 1,276 pips. That will be 12,760 US dollars. So my risk reward ratio is definitely okay. I have enough balance, if I'm looking at the $10,000 account, to sustain a fluctuation of 3,260. I understand my risk. I understand my reward. I'm ready for the fluctuation. Everything is exactly as I want it. Now, the only thing left for me to do is understand whether this point in time is the best entry point or not. Maybe I should wait for this to go up and only then take a sell position. Maybe. In order to understand that, we need to drill down to a lower time frame. So what I'm going to do now, I'm going to click on the time frame drop down menu over here, and I'm going to change to 1 week. On a 1 week chart, look at this. We've seen this line that it was retested before over here. If you remember, we talked about it on the monthly chart, only this was only 2 candles. Went up, touched our trend line, dropped down, tested our support, and that was last week. This week already opened strong, and a powerful movement up. So understanding this and looking at this candle, we refer to this candle somewhere between a hammer and a morning star. A morning star is a candle that has almost no color, no thick part, no body, but has long strings, long shadows on both sides. So when you see a morning star is signaling or showing you that there might be a change in direction from a downwards trend to an upwards trend. Let's take a different example and look if we have any. Yes, we have here, this is an evening star. This is showing you that you're changing direction from an upward trend to a downward trend. This is what you see over here. An example for a hammer is what you see over here. You can see this red candle over here. A hammer is where you have a small body on the top on the candle and a long shadow on underneath. Can be also an upside hammer. A regular hammer shows that the prices should go up. An upside hammer shows that the price, like you see over here, will probably change direction to a downwards trend. So this looks more like a regular hammer or a morning star. So this is already an indication that prices are going to go up I can tell you that we gave out a signal 2 days ago. Sorry, the price was 1.1675 when we gave the signals. People already made 100 pips. If you understand the calculation already, every pip is 2%. So 200, the 100 pips that people already made is already tripling their investment. It's 200% profit. But it doesn't look like it's over. We definitely see that the momentum, we definitely see this indication of the candle and the touch of that support that on a weekly chart, at least for the next couple of weeks, we should see this going up minimum to this point to equal the left peak. This is what we call a head and shoulders. Left shoulder, head, and right shoulder, and then drops to the bottom. So what I would do, or what I will do definitely, is once prices are reaching the 1.19, I would take it at 0.0 just not to miss out on the entry point. There I would take a sell position where I put my first take profit for half of the amount over here, make it about 400 pips, that 8 times my investment, and then taking the rest of it of another 20 times my investment from here to here for the other half of the amount. Altogether, I will definitely won't take a buy position now from here to here. This is going against the trend. This can change direction right now. From at the beginning of the week, you can take a position for a buy over here because you have an indication, but you take it for half of the range. You don't take it for the whole range because you're going against the trend. You know the trend is a downward trend. Do not take a buy position, even if on the short term you see that it's possible. Don't go against it, and think about it that if you take a buy position here, your risk calculation is to understand the distance between the current price and this price, and that's a risk reward ratio that doesn't make any sense. So guys, this is in general how to look at a long-term trend. I'm going to go back to the monthly chart just to summarize what we did so far. So we understood the trend, we understood the overall movement, we understand the fundamentals that actually brought us to that beautiful chart and why it happened. What's very beautiful is even when we don't know what's going to happen and we think that things are going to go a certain direction, even if it goes against us, and we were ready and we understood the risk and we left enough money backing us up and sustaining that fluctuation, then we will be on top and at the end of it, even if we need to wait for it. I can tell you that when we gave out the signal to buy over here, a few months later, some of our clients weren't very happy, to say the least, and they heard us telling them the same thing over and over. Wait for it. You have enough money to sustain the fluctuation. Wait for it. Wait for it. Wait for it. Most of them already jumped out of the train over here, but only this distance, as I said before, is about 8 times your investment. So I can tell you most of them are happy. The ones that didn't listen and bailed out and ran out over here, unfortunately didn't make the money expected. At the end of the day, trading is about emotions. If you made a calculated decision, if you understand the risk, you understand the trend, you check the trend and the best entry point on a lower time frame than the first scale that you looked at, trust yourself and wait for the position to close by itself at the take profit. Do not intervene. Don't let your fear or greed on both sides control your logical decisions, because at the end, that's what separates between the winners in this market and the losers in this market. So one recommendation from me, I promise I will give you one recommendation on what to do with this information right now. So guys, definitely wait a couple of days, see how this candle closes. If it closes in green, take a position for a sell. If it closes in red, take a position for a sell. Either way, after this week, a short position on the euro US dollar will be very, very, very profitable in the long run. By the way, CMS Trader does not charge any overnight fees or any swaps. So you open your position, we get the spread for that position. That's our commission. And from that point onwards, you're not paying anything. You can leave it as long as you want till it hits the take profit. There is no reason to change your mind in the middle. That's about it for today, guys. Thank you all for joining. I would love to hear if you have any questions right now, if there anything you need to know, if there was something that wasn't clear. That's the time to wave or ask. I'll give you a couple of seconds. No? Okay. I guess it was very clear. I guess you understood everything. So our website is cmstrader.com, and if you're looking for a company that provides a full educational program free of charge to its active traders and provides a personal one-on-one portfolio and investment planning, our representatives will contact you shortly to assist you in joining us. That's it for today. Have a great evening, and I hope to see you in our next webinar and to see you as our clients to help you make some profits. Guys, you have a lovely, lovely evening. Thank you. Bye-bye.